Good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for December 7, 2008. AccendoTrader.com, effective trade plans delivered daily. Each time we come together to work on our trade plan for the next trading day, we want to make sure that we know what type of news is coming down the pipe that can affect our open positions and what can move the market. We want to check in with some of the experts to see what they're saying about the market and which way it could go. We always want to see if there's any trends forming in the sectors. We want to check our indexes and scan for new trades each day, set alerts for the new trades, but most importantly, we want to make sure that our trade plan allows us to have time to spend with our family. Last week certainly was yet another up and down week. All the major indexes in a down for the week. But when we look at it as a whole, and look what's going to happen forward, you really can just flip a coin. Last week was a week filled with negative economic news. It started off Monday. We had the ISM index that was down to 36%. This has to do with manufacturing and whether or not manufacturing is expanding or contracting. Any number below 50 is contracting, and this is the lowest reading. I think they said, I don't know, something like 30 years. So below, it used to be where 48 would send the market tumbling, and we're down to 36. We also had auto and truck sales. They were dismal, with GM showing a 41% decline in sales. November retail sales were declined 2%. Of course, on Friday we had our non-farm payroll job. They fell 533,000. Basically 1.8 million jobs lost this year, and we still have December, so we're certainly heading over 2 million. And unemployment rose to 6.7%. So certainly a week of negative economic news. We had RIM put out an earnings warning. That's certainly, and you remember we've been talking about RIM, that saying that it wasn't participating in the move up, and we were talking about getting RIM below $40, and so that trade really happened. Should be interesting what happens from there. Of course, all week, for the past couple weeks, our new president has been talking about a huge stimulus package. His past two YouTube addresses have talked about that. Some 2 million jobs he's going to try to create through infrastructure, roads and bridges and schools and stuff. GE reaffirmed its dividend. If you remember a couple weeks ago, GM was just pulling the market down, and now it pulled the market up by affirming its dividend. Black Friday was better than expected to be. Amazon was the big winner on Black Friday. The auto bailout, there was an agreement reached late Friday for about $15 billion. They're still negotiating. The big thing there was whether or not it was coming from the TARP or some previous money they had to become more fuel efficient. And it looks like the president won on that. And oil's all the way down to $41 a barrel. You guys heard me a couple weeks ago, say if gas gets below $2, I'll pass out. Well, now it's down into the 150. So, wow. This week we got pending home sales Tuesday. Not a lot going on that's going to really move our market. So, really, we're going to see what the sentiment of the traders is going to be. As you can see, nothing big coming up on earnings either. I just threw on Lehman Brothers there for sentimental factors, but you can see nothing new coming on the earnings front. So we're really going to see the sentiment of traders and whether or not they feel that at this point, have we fallen enough from our highs with all this negative news? Now, we rally a little bit on the negative news, but have we fallen enough? But we'll talk about that more when we talk about, let's look at the charts. Now let's go ahead and head to the sectors. Okay, as we begin to look at our sectors, you're going to see basically the same pattern here. We'll see on most of the patterns, the sectors, you'll see good support has been established. The buyers are coming in saying, no more, we're not going lower, we're gonna go higher. But it is still a descending wedge, descending triangle pattern, so we'll have to see who's gonna win. But again, the buyers are stepping in saying, we've got sort of a triple, quadruple bottom going on, or mainly a triple bottom on most of them. But there are a couple of sectors that I want to point out. First up is insurance. And you can see here that we've made a good run and we're getting ready to pop above the 50 moving average. So if we can make it here, make it above the 50 moving average, I'm definitely going to be looking at some insurance stocks. Another one to look at, surprisingly, is retail. Look at the retail. I'm sorry, not retail, real estate. Now, we've been looking at a lot of the real estate investment trusts, and their spreads are horrible. But you can see real estate here broke above the 20. If it can run up here to the 50, that could be something interesting. I said retail because retail is one of the ones I want to look at. Look at that. And I've been debating, I told you in the past that I like Kohl's. But I'm thinking about going with the ETF for retail as a good, safe way to play this because, you know, who believes that the consumer is in a great position right now? But maybe this is all about a Santa Claus run, the Black Friday that we just had. Maybe they think we're going to get some buyers in here. But I'm probably going to play the ETF for retail to take advantage of this move. So, as we look at our three major indexes, the Dow, the NASDAQ, and the S&P 500, you'll see what we talked about with our sectors is that we're at a good support. Good support has been established here. And we have that quadruple tri-bottom formed here. And even though we have our descending wedge triangle play, we are a little bit out of it. Nothing to be ecstatic about. But what's important to note out is look at the Dow here. Here's our Monday push down ISM index to market crash. But then our buyers came in because, again, we have good support and they pushed us up. And on Wednesday, Thursday, and Friday, they tried to push us below Monday's close. But each time they were unsuccessful and the buyers came in and pushed the price right back up. So the buyers are saying that there is a place where they are going to buy. And also notice that on Friday, our volume increased. So, we're going to have some trades. We're going to focus on those three sectors that we talked about, insurance, real estate, and retail. I'm going to show you a couple trades to look at for there, the best ones. I'm going to introduce you some other trades also. But again, we're going to have trades to go both up and down because the market really is in a consolidation pattern here. And we really have to be prepared for which way it's going to go. Now, what could be our catalyst to move the market up or down? Could we finally be having this Santa Claus run that we're supposed to have every year? Don't know, but we need to be able to trade no matter which way the market goes. Okay, so let's move to the education portion of our video. We're using the book Trading a Zone by Mark Douglas. And now we're talking about aligning your mental environment. And Mark basically goes on to say that developing the perfect mindset can be thwarted, ruined by one line of code. If you guys remember the movie The Matrix, one of my favorite movies, and you had the Oracle and you had the architect, and they wanted Neo to go back into the code, and in the end, Mr. Anderson became a renegade code. What's my point? One line of bad code can ruin a whole program. I myself have, been working on my website, and, one bracket can ruin the whole web page because you forgot to close and then bracket, or you forgot a quotation mark for your links, or, and I'm sure many of programs out there can talk about that. And the key is whether or not, is it somewhere where you can find. Sometimes, you'll spend hours trying to find a quotation mark. And the same thing can happen in trading, that, you can have a mindset, but you can have one wrong idea about the market. You can have one misperception about trading that can ruin your whole trading system. When it comes to the ideal trading mentality, you could be a step away, you could be miles away. It all depends on what your perceptions are. And what we have to do is we have to recognize that you have some misperceptions about the market. The market is not against you. And we talked about this endless times about there's no vendetta. The market doesn't know about you. And you just have to look at it as a stream of opportunities. But if you cannot trade without emotions, then that one simple misperception can make you miles and light years away from where you need to be a positive trader. There are people making money who are, going gray and stressed out because they don't have a trade plan, don't know why they're trading. I mean, I've been reading a lot of forums lately, and that seems to be the thing where people just, are just trading. They have a couple winning trades and they think they have a system when they really don't. So It's all about recognizing your relationship with the market. We talk about this over and over again, and it's all about having a system that you back tested and you paper traded so that you can work out the kinks and work out your interaction with the market. So to get the podcast version of this, remember this is the abbreviated version. If you want to get the full version, you got to go to subscribepodcast.html. If you want to be a paid subscriber member that gets our stock trades every day. Every day we put out new picks for the week, and you go ahead and become a paying member of that. That's great. Also check out our blog and the 30-day challenge. Thanks, guys, and I will see you next time.